All right, what's up, guys? I'm about to make this video just really quick on trail stopping, trail stops, trailing any one of your positions, whether it's a put or a call. And I just want to touch on a few things really quick. Uh, I'm a zone trader, so for me it's a little different. Everything has to do with my zones, and I trail based off zones, and I trail based on the 15-minute and the hour time frames. That's how I would be trailing. So my trailing explanation is going to be a little different than most. But let's look at Apple. Hope you guys are having a good day today too as well. Hope not hope it wasn't too bad for some of you guys. My computer's a little slow, but it's okay. Okay, something about Apple. Something about Apple that I know a lot of you probably haven't really have recently noticed is that it's been moving a lot slower. Okay, one of the major reasons for that is because of the stock split. There was a stock split that happened, and right after that, it started moving slower. And again, you guys are still wondering why. Okay, well, Apple when it hit the top, I think it hit the highs of like 500, so it was in the 400s, 300s. So it was a stock that was trending based on hype. It was a stock that had a lot of volatility. This one in Tesla. Now this ticker has recently been trading in smaller ranges, so the ATR of it, it's no longer, a $10 move in one day, nor an $8 move in one day. Now we're seeing these $2, to $3 max moves, and on the good days, we recently just had a breakout. So you guys may call it the hype for the iPhone thing. So by the rumor, so the news, that's exactly what happened. That's exactly how it played out, and that is exactly what we talked about in the group chats. I'm sure everybody talked about, okay, I'm not saying that, our group chat is the number one or anything like that. It's something so basic that a lot of people miss. And a lot of people miss it because they're still looking for that same type of hype. And they're still looking for these big moves on Apple, like it's still going to happen like when it did before. Reality check is the fact that it's trading at a lower number. The number meaning the stock value, meaning it's at 120 right now. It was trading at 110. It was trading down here at this 115. It went as low as this 105, 104. So that's what I mean by it's trading at a lower number. and the fact is that the volatility is not as heavy as it was here in the past. That's why we had that stock split. The uh, the Apple just came lower, so it was a 4-1, which is a good thing for Apple because everything that they make now is just basically extra revenue for them, and it's pretty cool. They kind of had like a fresh start, and this is why everybody sees Apple as a great stock to buy now, because technically it is. Buying Apple at $100 to $120 is actually a very, very good price. Okay, a few years from now, you're not going to see Apple at 98 bucks. You're not going to see Apple at 50 bucks. You're probably going to see Apple, maybe in the 150 range, 200 range again, a few years from now, because Apple is a great company. So that is one of the reasons why, well, one of the few reasons that Apple is trading uh, in less ATR movement. Okay, so again, do not expect Apple to trade in this huge freaking moves every day. This breakout was also by the rumor, sell the news. So it had an extra confirmation and it had an extra boost to go long on Monday, and everybody made money on Apple Monday. I hope everybody did. Now, one thing that I do is I trade based off zones. Okay, so here you see a range. Okay, here you see some support. So if you know a stock is at support, what is the number reason for not grabbing the support? If you see a stock at resistance, what is your number reason for not taking your profit or not even grabbing a put? Basically up to you. Okay, but here we see the breakout, and that's exactly what happened. Okay, now I have my targets and I hit this target perfectly. This is why I have zones. Okay, I don't look for specific price points. I look for these right here. So I look for where there's multiple areas where there's candle bodies. Okay, basically it's telling you that, you know, this stock had a fight versus bulls and bears, and whoever won the fight, that's the direction that you're going to get. And the direction that you're going to get, you're going to create more patterns. You're going to create another fight. That's basically what happened here. And the bulls found that there was a lot of value in Apple at 112.50. Okay, so 112.50, now the high of it was right here, your 118. Today we landed at 118. Okay, so basically what you see on Apple happening is the fact that we broke out of this range, went up to this high right here, where the bears had taken over right here in the past. Okay, they showed up again. Okay, even though it was sell the news. Okay, there's your extra confirmation to take it short. So you had two confirmations to go short. You had the bears taking over on the top of this range, and you had the sell the news hype. Sell the news hype, which brought it back down, and then your confirmation to hold longer for the retest of this breakout. And look exactly what happened. Okay, here we go. Okay, now what we're doing, right? You want to get closer on these levels now so you understand the bigger picture. I'm gonna go on the 15-minute because that's what I look at it when I'm day trading. I look at the 15-minute. I don't go any shorter than that. Here we gap down. Okay, the whole market's crashing. Everything's burning. We woke up on a gap down for everything. Okay, I'm sure a lot of people lost money. I took a loss on Tesla, which is fine. I knew my risk, and I understood that the market was coming down. So here now we have Apple coming up. 15-minute time frame. You want to grab your levels. Okay, my levels will still stay the same. My levels will not change tomorrow, nor next week, nor next month. If I tell you that 121 is my entry for long, it is the same entry for a put or long later on down the road. Take profit. Here it is. Your 124 area is going to be the same tomorrow, same yesterday, same a month later. It's going to stay the same. My zones will never change. These ranges will never change because it's all about bulls and bears, and these are the prices where investors see value in. So again, what time frame are you on? What are you trading? What expirations are you grabbing? All that entails when it comes to trailing your stops, trailing your positions, understanding the bigger time frames, understanding your smaller time frames. Okay, I just showed you the 4 hour, and I basically showed you that you could have grabbed the put right here and then sold it right way at the bottom of the retest. So basically anywhere in these days you could have sold the put. You could have been fine. You could have been in the 125 put maybe 2-3 weeks from now, and you would have still made a lot of money coming down here, opening up at like 119. You could have sold today at open. Even with all this movement, you would have still been green. Even with this pullback, you would have still been green. All this, you still would have been green on the 125 put had you taken that and understood exactly what's happening on a bigger time frame. And of course, if you would have taken that put, the stop loss is right above. So the risk to reward, it's right there. It's clear. That should give you a clear picture of understanding where that would be versus all that. Okay. So time frame, everything has to do with time frame. Okay. Now let's talk about the 5-minute. If you guys are trailing on the 5-minute time frame, okay, you want to use your pre-market levels. Pre-market level down here. You can use this tight pre-market level. You can use this other pre-market level. Marking those levels will give you an entry. Okay, you guys have seen this multiple times in Bueller's chat. Okay, and he teaches this perfectly. He gives you the video, he gives you the Iron Hands video. He gives you so much information, so much value in the YouTube channels and also in the guides. This is clearly explained. Here we have the breakout right at open. If you don't want to trade the first 5-10 minutes, don't trade it. Okay, because look at this next candle. Okay, some people don't trade the first 10 minutes. Okay, here's your first 10 minutes of the market open. Here's your next candle. Here, you enter for a long right here. and you're gonna trail. Okay, your trail stop hit already the first 5 minutes. It's that simple. It hit the first 5 minutes, especially if you're not using indicators. I don't use any, so for me, I would have stopped out already on the 5 minute time frame. I would have got in right here, I would have been green, and I would have stopped out real quick. Okay, so everything has to do with your time frame, especially because of this level right here. We're over these two candles, yes. We're over the pre-market, yes, but we still need to get up in here and then fill this gap, because technically that's what everybody wants to play, wants to grab the call for the gap fill, and technically we have not filled it yet until now. Okay, so here you go. Most of you know how to trade on the 5 minute a little bit better. Most of you will follow the 9 EMA, I believe. Getting a little closer, maybe you do the 8. And as long as it doesn't break the 8, you're fine. But again, for me, I don't trade that. I don't trade that way. I will technically stick to just the candle bodies, and that right there would have stopped me out my right at entry. Stop loss, again, if you want to give it a little further, stop loss would be down here, because the pattern is still up. The pattern has not changed. The pattern is still trending up. So there's no reason for you to get out had you entered on a bigger time frame. Now again, on the 5 minute, you want to come back again. You don't have to trade the first 5 minutes. You don't have to trade the first 15. You don't have to trade the first 30. Whatever it may be, whatever time frame you're looking at, wherever you feel more comfortable, that's where you come in to trade these setups. If this already had the move, you don't need to get up here. You don't need to get in up here, because technically the entry was down here the first 5 minutes. So it gave you a closing candle right above, and it gave you more candles to keep going. So you could have trailed it, and you could have basically took profit there. Okay, whatever time frame you're comfortable in. If you waited just a little longer, here's your second entry. Okay, the moment this hits, you grab it. Grab that call with the stop loss right below here. Okay, so entry would be the 119. Okay, stop loss, it is 118. You want to get specific, 36. You can do 118.50. So time frame is everything. Time frame, don't let it go below that. Have a plan. Have something that's set up perfectly just for you and your style of trading. Okay, again, you could have trailed it. This is 3 candles already at the entry. 1, 2, 3 candles, and you're green. Basically an easy scalp. If you hold it longer, you would have never got stopped out, because from your entry, your stop loss would never hit. So technically you still hold it and you trail it. You move your stop up. So if you're on Apple, you get in at 119. Your trail stop, 119.50. Okay, for 119.50, you push it up into the 120. The 120 basically is your next trail stop. Here we go, 120.50. Okay, that's why it's 0.50. Apple is not moving much today. Apple is more of a range trading today. And again, you could have got in back right here, 119.50, and rode it back up here. Same thing. So multiple ways to make money in the market. It's just a matter of when you're comfortable, what time frame, what time of day, and what volume you're looking for. That's all that is. Now, the hardest thing about it is that an option contract, you can't really trail it on the smaller time frames as much as you would on the bigger time frames. The reason I say that is because this right here, had you entered this 119 contract, or maybe the 120, you would have been holding, and the theta would have killed you all day. So the premium, you would have lost so much value had you held all day long, just so it can gap fill. Enter right here, your contract is dead pretty much, break even, and then now you're at a slight profit. So everything has to do with your theta, the premium, the movement of it, and the time frame. This is why I always say that when you guys are trading, please grab the in the money 2 to 3 weeks out. That is the safest trade you can take, because if you grab the weekly, I'm sorry, but your weekly is going to crush you, and then you're going to wonder why you're red on the day. Okay, here I go on the 15-minute. Same thing on the 15-minute. Look, if you're not comfortable trading the first 15 minutes of the market, you already got a big move on Apple. Technically, it did not stay above that candle body, so it did not keep trending up. Okay, so this, I would have never taken this long. I could have taken it here, and I would have took profit right here on the top, just because of this right here. Just saw this doji here on the 15th, and again, using the BB strategy, he clearly explains this right here. Right, I mean, you guys get the picture, okay? That's a clear strategy. You can trade this multiple times in and out. You want to scalp. I know a lot of great scalpers out there that, you know, do very well for themselves. But I personally will not scalp like that. But you can. Okay, let me show you another trending stock of the day. JPM. This is something that's going to be on my watch list for next week as well. Again, this is something that I had broke down a few weeks back, JPM, and the levels are still the same. If you guys notice here, this is still my level. Nothing has changed about it. Everything is still the same. Here's the range, big range. I'm waiting for that big range to break. Okay, showed you the bigger time frame. I'm on the smaller time frame. I have multiple alerts up here because I want to know when we start going up here. The minute I get over this range, I am going long. I am not thinking twice about it. I'm going to understand that it's a break of a bigger time frame. Here you go. Hopefully you understand that. And yes, I am in a leap still, and my leap is down like over 50%. But again, I don't care if it's down 50%. I'm not holding it for a month or two. I'm holding it for longer than 2 months. I'm not holding it for 1 week. I'm holding it longer for than 1 week. So again, it's time frame. It's all about what you're grabbing in your contracts and understanding what the play is and how you're going to trail this. My trail stop is actually way down here for the leap call. If we get down here, then I'll probably just buy another one closer in the money. Okay, but here, JPM, look. I hope that's clear as day on the 4 hour. Yesterday, I went over some stocks with my guys, and I clearly told them that I said at 99, I want to buy tomorrow. I said that when we get down here, I want to buy it with down below the 99. Right below the 99 would be my stop. Okay, I said at 100, I would know that it's still bullish. And it did exactly just that today. It actually pushed. Why? Because of all this right here, all this support right here on the bigger time frame. Even though they had this bad ER, okay, it's all about price action. It's all about understanding what the stock is doing and how the stock is going to react. JPM did not have a horrible ER. They actually had a decent one. So again, I'm gonna go on the 15 minute. Okay, and this is what I always like to say, that if you know you're at support, why are you not in it? Okay, what are you waiting for? Are you waiting for some type of confirmation? I mean, what else are you waiting for that has to do with price action? Price action tells you it's at support, so why not grab it? Okay. Now here we go. He would win against that 100 level, right? Okay, a lot of people are waiting for the break of this right here. But here's the support. Stop loss right below. See the risk to reward? It's small. So it makes sense. Everything is, it's a perfect setup for you to get in on this price action trade. Now, trail stopping, you would have never trail stopped. So you would have moved your stop to 100. Okay, and it kept pushing. The volume was good today. And this is the one ticker out of the rest of the financial sector that actually had a nice trending day. BAC had a nice one, and GS is kind of still down. XLF is the one you should be looking at if you're trading JPM. XLF had the same pattern as JPM right here. This is what I want to see going into the week. basically all this, I wanted to hold above this level right here where we're at, and this is the levels that I'll have for tomorrow and for next week. Basically a staircase pattern that I'm going to be looking for, because we just came down, we got hit from ER. We had the run up into ER. Look at this run up. It was a nice channel, right? I mean, that's clear as day, I hope. We had this nice channel up, and now we're down here and we're trying to create a support. We created a support, and now we're going to create some patterns going up. So we'll definitely watch that into the coming week. But again, have those alerts on top. Okay, I'm giving you guys a proper video today. Here, understand, grab 2 times 2 contracts in the money. Maybe the 105s. I'm actually go look now. They're not bad. Look, they're 0.95 right now. They're about $2 in the money. You're only 60 cents away from the 102s, right? So I'm assuming that's probably the same price point that you'll have on the 105s once we start breaking this 104. So you can grab 2 105s for like $4, around that same price. So that's not a bad price point. Even if you grab one, you're fine. But let one go. Your first target would be up here, your 106. So you're going to be in the money $2, and you just paid about $4 for 2 contracts, or $2 for 1 contract, depending on how big your account is and how big you want to go. And you let one go. Buy it for the rip, buy it for the IV, the volume, the momentum, and understand that it's a bigger breakout. The bigger breakout, the bigger move. Okay, so the move is going to be the size of this range. The size of this range from, you could just say 91.50 to this 104. You do the math. That is going to be the size of your move into the next target. I'll let you do the math. I will not give you that piece. You got to do your own homework. Okay, so this would be another one that you would have been green on all day today, okay? Let me show you one more. Let me show you why the bigger time frames matter so much. This is a ticker that I posted today, Lyft. Okay, again, do your own homework. You know, we can't spoon feed every single person. I cannot make you to do your own homework. I cannot make you to pull the trigger on these specific setups that work out perfectly. Okay, but I can show you a chart, and it is up to you to go set that alert and to go follow the time frame that I posted the chart in. Whatever time frame the chart was posted in, that's the same chart that you go look at and you set your alerts on and you prepare yourself for. Find the next target, find the size of the target, okay, the size of the breakout, the size of the range, and the time frame that you are going to be in when you're trading this. 4-hour chart, you never be stopped out on puts for Lyft. 15-minute chart, you will never get stopped out on puts for Lyft. Okay. 5-minute chart, you still do not get stopped out on puts. Yes, you have opportunity to grab this and take profit down here wherever you like, and this is the first 5-10 minutes of market open. If you missed that play, it's because you did not understand the fact that it was breaking right at open. Same thing with the 15. So it's the same thing. Here we had a huge candle break. Here's a retest. That's as far as it got, and it's still down. So either way, this is right at open, and you will never got stopped out on this either. If you're in a long put, like I say, 2 weeks, 3 weeks, whatever it may be, you're in the money. You probably grab the 26 put. Probably grab the 26 put. Yeah. So you would never got stopped out. You're still in the green. But that is how you trail your positions. It's not, you know, for, like I said, for me, it's a little different. It's basically understanding these zones and how we're going to go from zone to zone, how we're going to have those breakouts, how we're going to have the size of the move, you know, versus the little time frames. It's all about having that plan, all about understanding what is going on in the bigger picture, understanding the market sentiment. It's a variable of a lot of things. And again, every time I hear that comment, like, oh, I should have held longer. When I hear things like that, it's because that clearly tells me that there was never no plan. It clearly tells me that you were emotional when you took that trade. And emotional because you did not understand your take profit. Emotional because you're probably trading on the 1 minute chart and it came down with this huge candle and all it was a pullback, you know, on the 30-minute chart. So you could have been holding this ticker a lot longer. Stick to your plan, stick to your rules, trade that way. If you're trading the 1 minute, stick to the 1 minute time frame, take profit on the 1 minute time frame. If you're on the 15, do the same thing with 15. If you're on the 4 hour, wait for the 4 hours. Wait for the 4 hour candles to close. You're going to expect some red ones on the 4 hour time frame. That's the point of swing trading. So everything has to do with your time frame, okay? Especially with these contracts, remember that theta burns. Okay, so I'm gonna show you another one, MCD. Okay, Bueller called this one out in my chat. I had taken that trade and I took profits on it because he called it right here at the 226. I opened red. I still held it. Everything about the pattern was still intact. Okay, and then I ended up taking profit over here at 228. I ended up taking profit. Okay, look at the next day. It's swing trading, right? So swing trading, you wake up red. Cool. The pattern is not broken on the 4 hour time frame. Okay, here we go. Pattern's not broken. Still solid green candle. Look at this red candle. It's a small one. So really on the 4 hour, there's no reason to sell this one. Okay, look at this. It's still green. Look at another gap down. Still, pattern did not break yet. And look where we at today. Okay, we're close to that 230 already. So the contract is pretty big already. This is the one he posted. Actually, you guys can check it out on the Instagram. You can check it out in the chat of the one he specifically posted. That is the one that I took, and I believe now it's over like $4, and I had got in for like 150. I sold it for about $2 over here. But again, I was able to take profit. I was able to understand the bigger time frame and what he was looking at, and this is why I took that specific trade. Even though I ended up red that same day, it didn't matter because I understood it, he understood it, and it all hit target perfectly. You had enough time to get back in, enough time to get back in today. Had you hold this chart, have you did your own due diligence and set those alerts, you would have still been green today. This alert has not hit, so technically I have not graphed puts on it, and I will not play puts until that breaks. Until then, that is my buy area still. That is still going to be a support area. All it will be is just going to be a retest of the range again and coming back into the this range here. So you can play ranges all day long. It's just a matter of you having those alerts to trail stop your position. Okay. So that's just a quick little video on my style of trail stops. It's a little different. Some of you guys may or may not understand it, but if you look at my charts, you look at those callouts that are posted, you look at the levels that are given, you'll see why I hold longer than most. You'll understand why I buy the dips. You'll understand why I like to buy on red days. You'll understand that some of these plays are all based off price action. And again, I don't like waiting for those, you know, EMA crosses and you know, Fibonacci retracements. I don't wait for those because, you know, I don't use those indicators to tell me or to give me a confirmation to take a trade. I take the trade based off the zone, based on price action, and everything is based on this market when it comes to buyers and sellers. That is it. That is the one thing I look for. That is exactly how I'm going to take my trades, and that is exactly how I'm going to take my stop losses, based on buyers and sellers. If there's buyers here, guess what I'm doing? I'm buying. If there's sellers here, guess what I'm doing? I'm selling. Play puts, play calls, play it however you want. if I say McDonald's 229.51 is the level to watch out for. That is the level that you're gonna use tomorrow as a put or call entry. I don't care where it goes. As long as you understand that that's the level, that's the entry today, tomorrow, next week, same thing. It's gonna be the same. When it comes to my zones, when it comes to my levels, that's how they're going to be. That's what they're gonna stay. If they change, it's because they had a stock split. That is Apple and Tesla. Other than that, they're staying the same. So here's PayPal. Let me just explain to you why I was on PayPal from the last time. Here we broke. We were able to swing it to the high of 209. So that was an awesome play. My guys were actually able to play that. I was able to make a lot of money on this one. PayPal was real good to me. Now, look what it's doing today. So push down all the way from the big moves. Understandable. It's nice to have a red candle. Okay, these red candles you should never be panicked on, especially if you're in a call. I actually put a 205 call for October 30th. So this is again in a long swing position, and it's broken down here. Everything is planned out. This is the video that I made before. Again, 4-hour time frame. Get back in here. We actually got in at the dip yesterday, so we are in a call for October 30th. 205 calls, PayPal in the money basically. So we're gonna watch this play out next week. I'm expecting for the retest of the all-time highs. So we'll be in the money $5, $7, $7.50. Hopefully it goes more up than that. So we'll wait and see. And but yeah, that's what I got for you guys. I hope this helps. Let me know if this helps. Tag me in the chat, whatever chat you'll find me. Tag me on Instagram. I don't care. Wherever you guys want to tag me, tag me. But yeah, if you guys have any ideas on more videos that you guys would like to see based off zones, let me know. I'll make them. I'll post them. And until then, stay green, guys. Be wise. Be smart. Don't get too scared. Don't get too emotional. Make the play. Trade the setup. Keep it simple. All right, guys. I'll catch you on the next one.